Wait a second. Oh, here we go.
On.
Welcome back, everybody. Another Chart Addicts live stream. We have the Davos conference happening, the World Economic Forum, this annual conference meeting between technology leaders, political leaders, and thought leaders from all over the world gather. This is basically a meeting of the minds and a meeting of power to basically get on the same page about all of the global trends. And so you have some of the most powerful people, no, not some of the most powerful people in the world coming here to speak. And of course, Trump is going to be hitting the stage tomorrow morning. So we'll be live streaming that on Wednesday, January 21st. I'm catching up on Scott Bessent's speech here at the World Economic Forum with Maria from Bloomberg, if I'm not mistaken. So um, I'm going to let this play in the background just to kind of give you guys a heads up on what I'm seeing on the charts here. So we were looking at this range yesterday for a potential double bottom push to the upside. That got violated. And so this is really for Chart Addicts members, just to kind of give you guys a quick rundown. This was our previous range right here. So this would have been the Model 1, which already played out. Model 2 would be from this support to here for the retest, which we are retesting right now. If I draw my fib to that low. However, what we can see is that we've already closed under that fib. Okay, so then the last line of defense for us is the Model 3, which is this support down here. So looking at this move. Okay, so on the CFD charts, it's 24,845, but on futures, that price would be give me 2 seconds. Let me adjust this fib. Well, I'll be honest, here on the futures chart, it looks like price has already hit that ideal entry zone. So we'll be looking for a retest of 25,090. So exactly where that rejection is, I'm looking here on the 4-hour time frame, but we can even go into the 1 hour. So as you guys can see, we have a beautiful rejection here. I would be looking for a retest as close to that zone as possible. So anywhere between 25,090 and 25,140, this area here. Okay, so for the market open, I'm looking for a retest and push all the way up. If we look down at the smaller time frames, really get in here and get granular. Basically, we'll just take this previous impulse, we'll draw the body. Draw a Fibonacci retracement here, get rid of some of these extra zones. And so this is going to be my ideal retest entry for the market open. Very, very simple. Okay. So here on futures, it would be about 25,140. That's going to be the smaller time frame retest zone, which we should see in the next 10-ish minutes because we're right at the market open. So I'm looking for this move. Very, very simple. Now, because there's a higher time frame, 88.6 right below, there's a chance that we break through the zone, clear liquidity, and come back up. So you have two options. If you do want to enter this first trade, you're going to have to put a wide enough stop loss to account for this higher time frame 88.6. So if it goes a little bit lower, you'll still be good. Personally, what I prefer to do is have a tighter stop, take that 88.6 trade. If it violates, then I'm going to do a second position. I'm just going to re-enter on the way back in and buy this thing all the way up. So right now, it's the market open. We're waiting for the market to come down to the retest zone. We're going to take this 88.6 trade, and we're going to take this up at least to the double top, and then to the higher time frame, 61. Put a 1 in the chats if this is good. Members, we good to go? Let's listen to Scott Bessent speak while this thing loads. This should take another probably 20-ish minutes to cook up. So what I'm going to do is set my alerts right below this wick. Easy. And set my alerts above this wick. So if it breaks to the upside or the downside, it will be obvious. Okay. Devaney gets it. Bobby gets it. James gets it. Who else? Two-step. You at work, buddy? Bobby, good to see you. James, good to see you as always. Big T's in the house. Devaney's in the house. Two-step. All right. We got a pretty good squad here. Let's see what Scott Bessent said. Let's go.
We so appreciate it. And there's so much to talk about. And we are going to be rolling on this live in about 20 seconds on Fox. So we want to make sure that everyone knows that this is a live program and we will be taking this as it is happening with the secretary this morning. I know there's a lot of conversation this morning about President Trump's considerations and thoughts about Greenland, and we will get into that, as well as the U.S. economy and the global economy as well. So, Secretary, there's so much to cover. Let me kick it off right now with just that, because I want to talk about trade and tariffs. It seems that the president certainly has set the tone before he even arrives tomorrow. So we'll get your thoughts on that, as well as AI, about the NATO alliance, as well as the macro story. And I will also bring up something that you mentioned earlier, which is the Draghi report. The reason that I'm strolling here is because I wanted the programming to catch up with us, so that we could begin live at 8:30. And in fact, we are beginning right now. Thank you so much, everyone, for joining us. I'm sitting now with the U.S. Treasury Secretary. Secretary, let me begin on trade and tariffs, because President Trump seemed to set the tone of conversation even before he has arrived by threatening tariffs on our European allies until they support his plans to acquire Greenland. How do you justify taking over a country when, in fact, Denmark and Greenland have said they are not interested?
Well, Maria, I think the president has a very strong view on Western Hemisphere security and believes that the U.S. should not outsource our national security. He believes that Greenland is essential for the Golden Dome missile shield. And he also, the president, as usual, it's the move after the move that as part of NATO, I think the president is worried that if there were an incursion into Greenland, the U.S. would be called upon to defend Greenland. Greenland's becoming more and more attractive for foreign conquest. And he very strongly believes that it must be part of the United States to prevent a conflict rather than getting the U.S. engaged ex post into a hot conflict.
So Greenland is not expected to be able to have the capacity to stop any potential missiles that could hit the United States. In other words, Greenland without U.S. ownership makes the United States vulnerable. Is that the president's main complaint?
Well, I think it's that, and that the U.S. there's the opportunity.
See, why are they asking the Treasury Secretary about geopolitical strategy? What does the acquisition of Greenland have anything to do with the Treasury Secretary? The Treasury Secretary is supposed to be managing the banking system and is the oversight of the banking system, and, well, obviously the solvency and liquidity of the overall, banking, and then the budget, the piggy bank of the United States. Managing our deficit and oversight of the banks is the main function of the Treasury. And so the Secretary of the Treasury has nothing to do with geopolitical acquisitions of another territory. So I don't know why most elected officials or most appointed officials will typically say this is outside of my scope, and you should probably ask the Commerce Secretary. But not Scott Bessent. Scott Bessent got an opinion on everything.
For the U.S. to become embroiled ex post into a kinetic war if another country moved in on Greenland, and no country is going to assert control of Greenland if the U.S. controls Greenland.
Secretary, what do you want to say about the response here? I mean, the European Union is pushing back, saying we are not going to complete our trade deal with the United States because of this. They have already called an emergency summit for later on in the week about this Greenland situation.
Well, I would say exactly what I said after Liberation Day last April, when the president imposed tariff levels on the whole world. I tell everyone, sit back, take a deep breath, do not retaliate, do not retaliate. The president will be here tomorrow, and he will get his message across. I believe he is going to have meetings, and again, also have an open mind. That, you know, why this rapid response in terms of, you know, this is a no. And by the way, Maria, this has been in the minds of American presidents for more than 150 years, for more than 150 years. And
the vulnerability was seen even back then.
Well, or the strategic value of Greenland. And I think as there are more trade routes that.
So ask yourself, why has no president taken initiative to conquer Greenland in 150 years? I just ask yourself, why haven't we just taken it over? Maybe it's because of diplomatic norms, like basic sort of like unspoken rules or written rules about global order. No more colonization. We kind of already had this precedent where we're no longer going out and colonizing different territories. And then maybe that's why in 150 years, no president has taken initiative to go and conquer, even though we could have militarily. So he's making it seem like, oh, he just saw this opportunity that everybody else had missed or just didn't have the balls to go take. But really, every other president understood the impact of taking over a NATO allied country. Greenland is managed by Denmark. Denmark is a NATO ally. And so just going over and just taking one of your allies' properties, not a very good way to maintain global order. So yeah.
Move near Greenland, Greenland becomes more and more valuable.
Secretary, we're already seeing a reaction from markets. You've got rates spiking in the United States, up 7 basis points on the 10-year right now. You've got rates spiking in Japan. What do you want to say about this market reaction that we're seeing?
Well, Maria, I think it's very difficult to disaggregate the market reaction from what's going on endogenously in Japan. So Japan, over the past 2 days, has had a 6 standard deviation move in their bond market. That would be what has happened in the Japanese JGB 10-year would be the equivalent of a 50 basis point move in US 10. So I think it's very difficult to disaggregate what the spillover from Japan is. I've been in touch with my economic.
Well, I'll give you guys a hint. Basically, if the bond market is, let's just use a colloquial term here, cooked in Japan, then most likely there's going to be a massive selling of Japanese bonds. If there's a massive selling of Japanese bonds, they're going to have to go to another currency, which is either going to be the yen or the dollar. So first, it's most likely it's going to be the yen. And so we might just see some flows in the yen index, which I'll check real quick. Here's the yen basket. So it's the opposite. We're actually seeing a massive push to the downside. So it seems like people are not only getting out of the bonds, but they're also getting out of the Japanese yen. I mean, granted, this is the 15-minute. Let me go to the daily. Yeah, it looks like the Japanese yen is getting crushed. Typically, what the Japanese government will do is whenever their bond market is in distress, they will print a bunch of their currency, the yen, and then buy a bunch of their own bonds. So by buying back their own bonds, they can artificially support the price of the market and keep it from crashing further. What that does is, in order to save your bond market, you have to overprint your currency, which destroys the value of your currency. So yen bearish, UJ very likely to be bullish. I'm going to take a look at the dollar index real quick and see if the dollar is the one that's actually getting most of the flows. And it is not. US dollar index still sitting below the range. If you guys have been following the stream for a while, you know we have the super secret magnet indicators. We've been sitting below this 100 to 107 range. Right now, we're in this consolidation. And so we are very likely to, after this consolidation here, see one more push to the downside and then a continuation back up. Right now, we've been seeing a lot of moves on high risk assets, specifically NAS and cryptos. And I think a lot of that has to do with the dollar leading the charge. And so we just got an alert on NASDAQ. Well, we'll go back to the currency correlations here later, but as Bessent is describing the bond situation in Japan, just understand that they are in a fight between their bond market, which is how they fund their government, and then their currency, which they're printing at record rates in order to prop up their bond market. And so they're sacrificing their currency to save their economy.
My counterparts in Japan, and I am sure that they will begin saying the things that will calm the market down.
So what are the plans for tariffs on Europe then?
Well, we're in the midst of completing a very good trade deal for both sides. So the plan is to go ahead with the trade deal. Of course, the president has said that he, on February 1st, will implement a 10% tariff if the Danes do not want to give up Greenland, and it is on the 8 countries that sent troops to Greenland.
So what do you want to say about the NATO alliance then? I mean, Denmark has been a long ally, the European Union united against any move. How do you progress with what looks like a strategic move for the United States, but also preserve the alliance, the NATO alliance?
Well, look, I think that the NATO alliance is very safe, sound, and thanks to President Trump, it's never been more secure. When President Trump came in his first term, the European countries and Canada were not meeting their spending quotas as percent of GDP. Now they got a lot of catch up to do. And Maria, to put it in perspective, the United States of America since 1980 has contributed $22 trillion more dollars, or spent $22 trillion more dollars on defense than all of NATO. So roughly the same size population. And we have spent $22 trillion more. That is 2/3 of our outstanding government debt. Mm-hmm. Europeans have been spending the money on social welfare, on roads, on education, and it's time for them to pay more, which they've agreed to do.
Yeah, many of them have already.
All right, so it doesn't look like we're getting this retest. So, it doesn't look like we're getting this retest right this second, but it may come later in the session. If we go back to our previous markup here, just so we can stay consistent. If this thing ends up breaking back inside the range, we have a lot of room. We have a lot of room back inside. So we were looking at this range yesterday. I know it's a little messy because I kind of have the split screen here, but we talked about this support, and this support here. We are currently retesting that model 2. This is for Chartaddicts members. You guys know what I'm saying here. From this low to this high, looking at that model 2. If we break back inside the range, here's the 3 components that I would need to see in order to execute this trade. First, it's a break back above this previous high. Then it's a closure above the zone. So a break, it could wick and then keep crashing. That happens sometimes. We want to see a break above and we want to see a closure. And the last step is going to be a higher low retest. A higher low retest of that support. So that 3-step process is a break back in, a closure above, and a higher low formation at that support. If we get those, I'm going to buy this thing back up to the top of the range. Make sense? So right now, I can see the rejections. On the smaller time frames, we have this little scalp idea where if the market comes back down to the Tokyo session lows, there's a buying opportunity. But I'm going to stick to that bigger picture. Like if this thing ends up just breaking out of this smaller time frame, then what I'll do is just zoom out and go back to our old markup and use that one as our reference.
Already stepped up, like Poland.
Everyone has except Spain.
Okay. And do you not feel that a security deal in the Arctic would suffice in terms of Greenland?
Well, I think what we're seeing we're seeing with a base that we have shared with the UK for many years, the UK is signing the island over to Mauritius. So again, I can see why the president believes that for US engagement, we do not want another Diego Garcia on our hands.
This is a very important point that you make. In terms of tariffs, how much money has been generated from tariffs already? Certainly the hysteria over President Trump's tariffs have died down since April of last year. What is the total running rate right now?
Yeah, it's in the hundreds of millions of dollars, Maria. The U.S. for for the fiscal year, which ends September 30th, we had a fiscal contraction. For the calendar year, we had a very large fiscal contraction. So we cut the deficit by about $200 billion. The important number is the deficit to GDP. So calendar year 2024 was 6.9%, the highest we've ever had. I mean, we inherited a mess. 6.9%, the highest we've ever had when the U.S. was not at war or not in a recession. So 6.9%, calendar year 2025, 5.4%. I have called for getting that number down to 3% by the end of President Trump's term, and I think we're on the way.
So you've been using that tariff money to pay down the deficit then?
It feeds into the general account.
No, they have not been using the tariff money to pay down the deficit. Instead, they increased the federal budget by $2 trillion. They increased it by about 500 billion, and then they're increasing the national debt by about $2.5 to $3 trillion. They increased the defense spending budget by about 350 billion. All the Doge cuts that Elon had found, none of them actually got cut. There was like some like minute programs and kind of like a minuscule amount of money. But on the grand scheme of things, there's been no dent made in the overall deficit or the national debt. And that's why, the question she just asked him is, so you guys are using the tariff money to pay down the debt. And he's like, well, it all goes into the same cash account and we kind of just all do whatever we want with it. Listen to his response here.
We inherited a mess. 6.9%, the highest we've ever had when the U.S. was.
All right, and this shit is pissing me off too. Now that I've kind of hopped off the Trump train completely, now I'm going full fucking steam. Let's not forget who was responsible for the initial COVID response. Who sent out the initial stimulus checks? Who bailed out the banks? Right? Who launched quantitative easing? The fourth facility, the one after COVID. Who dropped rates to zero? It was all under Trump's administration. So before we say that like all the fiscal bills that were passed with the PPP loans and stimulus checks, those all started under Trump. And so the initial inflation crisis started in 2019. COVID just blew the lid off of it. And then Biden basically inherited COVID and inherited an inflation rate of 6%. Now, Biden fucked it up even worse by launching that giant omnibus bill, the Inflation Reduction Act, and basically bringing that inflation rate from 6% to 9%. But let's not sit here and pretend like the Trump administration inherited the Biden economy and there was no complicity at all from Trump printing all that money in the first place. The COVID vaccine, all the money that was printed, the PPP loan, which ended up becoming a giant scandal, all these things happened under Trump first. All right, just so no one forgets.
Not at war or not in a recession. So 6.9%, calendar year 2025, 5.4%. I have called for getting that number down to 3% by the end of President Trump's term, and I think we're on the way.
So you've been using that tariff money to pay down the deficit then?
It feeds into the general account, and it's been a big part of it. And again, last year, the U.S. 10-year bond was down about 40 basis points, I believe.
Listen, this is the last thing. This is the last interruption before I just let him kind of finish off. The TGA, the Treasury General Account, which is sort of like this master wallet, the master piggy bank, the master checking account for the U.S. budget, for like all of the money, the tax revenue that we all pay, like the money that our government uses to operate, all flows through the TGA. Now, it is one of the most convoluted and confusing things in the world for an accountant to try to parse through, and they do that on purpose. The money goes in, and then something happens to it, and they're doing whatever they want with the money. So just so you guys, if you guys want to read up on the TGA, the Treasury General account, you'll start to notice how fungible the money in there is. It's supposed to be for tax revenue. It's supposed to be for the certain function. Well, it's all money. It's all the same. We'll just use it for these different functions. It's a very disorganized and a very dangerous way to run financial policy.
France was up about 40 or 50. Germany was up 50 or 60. US bond market had its best performing year since 2020. And again, back to your point that after Liberation Day, April, May, it's the end of the world. Sell US assets. Just the opposite happened is as Treasury.
And a tip for traders, just sit on your hands. If you don't see a trade clear as day, I know some of you guys may have seen the 88.6 shorts, kind of from the bottom to the top of that range. For me, I had a very simple trade idea in mind. If that trade idea doesn't hit, then honestly, like I couldn't care less. There is no obligation to be in a trade. You're not getting paid to be in a trade. You're getting paid to follow your strategy. You're getting paid to have a positive risk and reward and a positive win rate and only take high probability trades. So if you guys are feeling some kind of angst about needing to be in the market, cut that shit out by now. All right. This is trading at the end of the day. You do have to be an adult about this. So if you feel some kind of itch or whatever it is, find a hobby, yo. Sit on your hands if you don't find it, if you don't see a trade, which is exactly what I'm doing here.
Secretary, I can see who the buyers are of our bonds, and we had more foreign participation than ever.
And just to be clear, a moment ago, when I asked you about the market reaction, you don't think markets rates are spiking on this Greenland story. You think that what's happening in Japan is specific to Japan.
Well, I think that the Japan situation, that the market there again had a 6 standard deviation move, and that was happening before any of the Greenland news. And I think the rest of the world, German rates are up, French rates are up, Japanese rates are up a tremendous amount.
Secretary, I want to get to the macro story in a moment, but let me stay on tariffs for one more moment, because we could be hearing from the Supreme Court imminently. And of course, the Supreme Court will issue a ruling on the president's use of tariffs during a quote.
And this is a very big deal, by the way, for markets specifically. If you guys look at the trend for NASDAQ or for any of the equity markets for 2025 and 2026, it starts with Trump taking office and then announcing his tariff policy. Markets go haywire. Then Trump mentions the 90-day reprieve or 90-day pause on tariffs for the whole world. Then we see a giant bull market leading up to Liberation Day. Then Liberation Day comes. Then we see that most of the tariffs were just kind of saber rattling. They weren't going to be executed on. And so we saw a massive relief. So tariff policy from Trump has been the #1 mover of markets since interest rate policy has been very stable and kind of predictable. The markets have been reacting to these tariffs. So this next ruling from the Supreme Court is going to be that next big sort of shift in the markets. It's either going to give it the fuel to make the next leg up, or this is going to be the fuel it needs to make that massive reversal. All right. So if you guys don't believe me, you'll go to your NASDAQ charts, gold charts, or dollar charts. You'll look at the day Trump took office. Then you'll look at the day that he announced the tariffs. And then you'll look at the day that they announced the 90-day pause, the Liberation Day, and then August when the 90-day pause was over and we sort of gave everybody else a break except for China. You guys will see how important this is. So this is what I'm watching mostly. Interest rate policy, and then the tariff, the legality aspect of the tariffs.
Emergency, the IEEPA, reason that you've actually issued some of these tariffs. What are your expectations for the Supreme Court? We could hear from them this morning or even tomorrow morning. If they rule against you, what are the alternatives to raise that kind of revenue, hundreds of billions of dollars that you've already been able to do?
Well, Maria, I think it's very unlikely that the Supreme Court is going to strike down a president's signature economic policy. It didn't early on with the ACA, also known as Obamacare. They reinforced that recently. And the real problem here is President Trump has used IEEPA for negotiating leverage for geopolitics in emergency situations. If we look back, the first IEEPA tariffs were fentanyl tariffs. So on Mexico, on Canada, on China. And if fentanyl is not a national emergency, I don't know what was. 200,000 Americans dying every year. And because of that, Mexico came to the table, Canada came to the table, China, who exports or the precursor drugs, have all come to the table. And we're seeing a substantial drop in protecting the American people. On October 8th, the Chinese government announced rare earth export controls on the entire world, not just the US, and which would have caused an industrial meltdown. President threatened 100% tariffs on China if they did this. My Chinese counterpart, who's been a very good interlocutor.
I have the same. I have a buy zone at the bottom, sell zone at the top. I'm using the gap here on MNQ. You guys see the gap here from Sunday? I'm using that gap as the top of my range, and I'm using the current range low here, the current session low as the bottom. And so we'll be able to see this trade play out ideally. Either one of these, whether it comes down to the bottom of the range or the top, we have a trade here.
Lateral trade deal with China.
I had a meeting with my Chinese counterpart here in Davos last night, Vice Premier Hu Lifeng. He told me that just this week they have completed their soybean purchases, and we're looking forward to next year's 25 million tons. I suggested maybe he'd want to buy a little more because President Trump always brings that up with Party Chair Xi when they speak, and they've done everything that they said they're going to do.
Are they having rare earth magnets flow, or are they putting restrictions on that? Because there were reports last year that the Chinese were saying, we will send the rare earths, but we're not sending them to any companies that are tied to the defense sector and the U.S. military.
They are flowing as expected. We are in a fulfillment rate that's in the 90s, which I think is quite satisfactory.
So they didn't stop, even if it's a defense company, because I believe they tried to do that with Japan as well.
Well, Japan and China have gotten in a skirmish over some remarks that the Japanese prime minister made. So the U.S. is immune from that.
Okay, let's talk macro. The U.S. economy seems to have been doing much better than many expected. We had a 4.3% read in GDP last quarter. How would you assess the United States economy?
I think that it is very strong and likely accelerating. And Maria, just to be clear, that 4.3% GDP was private sector GDP. So, or actually after the fiscal contraction. So the real number was 4.7. The government contracted by 0.4, so that got us to 0.3. So that is pure private sector GDP. And President Trump's economic policy, tax deals, trade deals, and deregulation, the deregulation, which I think is probably the most powerful part, is really just starting to kick in now. So we have the tax deal, one big beautiful bill done on July 4th, which no one said could be done. And it contains the full expensing for U.S. corporates on equipment, for factories, for ag structures. On the other side, for working Americans, the president's signature policies: no tax on tips, no tax on overtime, no tax on Social Security, interest deductibility, auto loans if you buy an American car. So we're seeing this wonderful balance between industrial America and Main Street America. I am also the IRS commissioner, and we did not change the withholding guidance. So we're going to see, as commissioner, I can see there are going to be very substantial tax refunds coming to working Americans in the first quarter. They'll change their withholding. They'll get a bump up in real incomes. Because of the expensing, we're seeing 12, 14% CapEx growth in the U.S., and historically, you have never seen a CapEx boom without seeing employment follow.
Yeah, you've got a CapEx boom and a productivity boom as well. 4.7% is much better than so many people expected last year. Are you expecting the economy to at one point hit 5% as well?
Well, the Atlanta Fed GDP number, which is a very noisy number, is now reading 5.3 because remember the fourth quarter GDP included the Schumer shutdown. So some of that will be pushed into the first quarter. So I'm expecting that we could be well north of 3, and we'll have inflation coming down. As you said, productivity is very high, and we have measured inflation and observed inflation. And with the observed inflation, I think we can see that prices are already down, and that will trickle into the CPI and the PCE, which the Fed looks at.
Well, it's a good point because there is still a perception that prices are still high.
Well, prices are high. The Biden administration was a wipeout for working Americans. That the price level increased by 21, 22, 23%. But our friend Jason Trennard, the strategist, has something called the Common Man Index. And that is, what do working Americans buy? So basket of groceries, insurance, rent, car payments, and that was up in the mid 30s. So very difficult, other than with energy. The president, through drill, baby, drill, has gotten gasoline prices down. We're below $2 in many states. National average is below 3, even if you throw in the outlier of California. And so that we can get down, and we are working every day to get things down. And affordability is two pieces. Affordability is price level, but it's real incomes. Real incomes have gone up every month since President Trump took office. And as I said, I think we're going to see a big year for real incomes this year.
Wow. And you said in terms of the tax refunds, are we talking about thousands of dollars that people will be getting as a result?
We could see, for working families, for each wage earner, we could see up to $1,000 per wage earner.
Okay. You said that prices are still coming down, but they're still elevated. The president announced many things, and you.
Hold on, we gotta figure out exactly what he just said. Is there going to be a guaranteed tax return for any of the savings that they've had? Let's see what he said.
Has gotten gasoline prices down. We're below $2 in many states. National average is below 3, even if you throw in the outlier of California. And so that we can get down, and we are working every day to get things down. And
before the move fully forms here, so there's two ways to draw this fib. So there's the actual swing high here to swing low, which would make our sell entry pretty close to where we are now, about 40 points away. Now, I drew my range from the gap as kind of a higher time frame zone, and so I'm using that as my resistance. And so the 88 kind of our prime entry is a little bit higher at 425, right? So a very big difference between 380, 425, excuse me, it's about 45 points. So again, there's two ways to play this. If you want to play this more conservative, you wait for the second zone, the higher one. If you want to scale in, then you'll kind of put in a tester entry, and then you will scale into a full position at the higher zone. Okay, so tester, and then scale into a real position. You can enter one position and have a big stop loss. That's up to you. Or you can be more conservative and just wait for that higher zone. Okay, this 24 or 25, 425 zone. Make sense? So we're approaching that sell area now. Here's the bottom of the range, here's the top. Location is everything. We're getting very close to the sell area. And so obviously we're gearing up to look for a potential scalp for shorts. If you guys have questions, put them in the chats. Let me know.
Affordability is two pieces. Affordability is price level, but it's real incomes. Real incomes have gone up every month since President Trump took office. And as I said, I think we're going to see a big year for real incomes this year.
Wow. And you said in terms of the tax refunds, are we talking about thousands of dollars that people will be getting as a result?
We could see, for working families, for each wage earner, we could see up to $1,000 per wage earner.
Okay. You said that prices are still coming down, but they're still elevated. The president announced many things, a litany of things, just in the last 100 days. And I want you to walk through some of these things and tell us why they're important, because he put a ban on large institutional investors purchasing single-family homes. He asked for $200 billion purchases of mortgage-backed securities, and he put on a proposal for a 10% cap on credit card interest rates. We know credit card interest rates are always soaring, up to 28, 30% in some cases. That's going to cut into earnings of the bank, certainly. And he also teased something about 401ks, that you would be able to tap into your 401k to then buy a home. Walk us through these things. Why are these so key, in your view, to growth and to reining in prices?
Well, here, why don't we start from the beginning? So
the first thing was the ban on large institutional investors purchasing single-family homes and the purchase of mortgage-backed securities.
Yep. So the ban on institutional investors in single-family homes, for those of you who are not American, in the U.S. pre-Great Financial Crisis, institutional investors did not participate in the single-family market. So post the financial crisis, institutional investors hoovered up single-family homes. They continue to do it, and there's an unfair tax arbitrage there. You and I have a mortgage. We can deduct the mortgage amount. Institutional investors can deduct the borrowing amount, but they can also expense any repairs and depreciation. So we think that it is a good idea to have them out of the market. We are going to give guidance at some point to see what is a mom and pop that someone, maybe your parents for their retirement, have bought 5, 10, 12 homes. So we don't want to push the mom and pops out. We just want to push everyone else out. And what's important here, you will hear some misinformation that says, well, institutional investors are 1%, 2%, 3%. That is true. Having been in markets for 35 or 40 years, markets are made on the margin, and institutional investors are much higher in boomtown markets like Charlotte, like Atlanta, like Huntsville, Alabama. So they've done that. In terms of having Fannie and Freddie buy MBS, the mortgages are two parts. It is the 10-year bond yield, and it is the spread between mortgages and the 10-year yield. So the purpose of that is to narrow the spread.
Okay. The cap on credit card rates is expected to cut into bank earnings between 5 and 18%. Your reaction?
We've done a lot this year. Bank stocks are at a new high. That through my position on FSOC, the Financial Stability Oversight Council, and the 3 bank regulators, the Federal Reserve, the OCC, the FDIC, we have done a lot to deregulate banks. Their earnings are way up. More importantly,
the Treasury regulates banks. The Fed has oversight, but they're not a regulatory body. In the same way the Treasury is. The Treasury is in charge of the banking system.
It has increased their lending capacity. Oliver Wyman's numbers, not mine, estimates that there's 2.5 trillion of extra lending capacity. The other thing that has been a focus of this administration and a focus of mine is small and community banks, because what happened after the great financial crisis, all the regulations from Dodd-Frank, we had too big to fail. But then with small banks, you were too small to succeed. This regulatory morass, we have lost more than 50% of the small and community banks. And they power small business lending, real estate lending, and ag lending. So we are trying to bring that back.
Yeah, it's a great point, because farmers really need the lending of these small community banks. Look, Secretary, I want to get your take overall on your thoughts on what you've done so far, because the president back last year, right after the inauguration, I sat down with the president and I asked him what he wants the economy to look like in 4 years when he's done. And he was very clear. He said he wants private enterprise to rule the day. 1 year later, you've taken a 10% stake in Intel. You've taken a stake in MP. Now, I know that these are national security issues. And the other day, the president told the defense contractors, don't pay dividends, don't buy back any of your stock. You need to be fulfilling what the country needs in terms of producing a weapon. So what do you want to say to people who say, look, here is a so-called capitalist president and a Treasury Secretary, and yet it's not private enterprise running things. The president is telling the defense contractors what to do, and you've taken stakes in these companies.
A couple of things, Maria.
David.
I think the only good thing that came from COVID was it was a test run for what would happen if our supply chains were ever broken due to a kinetic war. So we saw that there are 5, 6, 7 key industries that we have to reshore. So everything you just said, rare earth magnets, we've got to get out from under China's grasp. The semiconductors, I would say that the single biggest threat to the world economy, the single biggest point of single failure is that 97% of the high-end chips are made in Taiwan. If that island were blockaded, that capacity were destroyed, it would be an economic apocalypse. So we are reshoring the semiconductor industry to the US. With the defense contractors are no different than the systemically important banks. They exist, like the systemically important banks exist because of the backstop from the Fed, because of the regulations, and these defense contractors have let down the American people. They have let down the American people. They are 5, 6, 7 years behind on fulfillment of their contracts, and they exist because of the U.S. Department of War. So I do not think it is unreasonable to tell them that until further notice, you need to build more factories and buy back less stock. And by the way, Maria, these CEOs making $30, $50 million a year for failing the American people. So I don't see any discrepancy there.
So what do you guys think about that? I mean, on one hand, I'm highly capitalist, and so the idea of having the government instruct private businesses on how to run their operation, it's legal to buy back your own stock. So if you get a big, let's just say you have a really good earnings season, they make a lot of money. They have a choice to, let's just say they raise a lot of debt. They have a choice to either go and buy back their own stock and artificially boost that stock price, in which case the market follows, it drives the market valuation for that company higher, and all the executives get paid. Or you can actually take that money and go build stuff, reinvest in your company, go hire more people, invest in research and development. And so this is one of those instances where Trump was instructing the defense contractors to stop buying back stock and trying to get rich and trying to basically rip off the American people, and instead go do your fucking job, build missiles, build weapons, build defense systems. That way we can actually be capable enough to deter threats, instead of a bunch of tech oligarchs plundering the country at the expense of our national security. So this is one of those places where I'm like, it's such a big national security risk. It kind of makes sense that we have some safeguards here. And those other industries he mentioned, which is the artificial intelligence and what is it called? Semiconductor production. Those are also national security interests that we should probably onshore. So there are a few industries that the government already has control over, mainly utilities and some communication networks. And so I think this would just be another one they'd like to add to their list.
And it's, as you said, everything on your list is national defense. And so once normalized level of backlog, I don't know whether it's 2 years, 3 years, then we can talk about removing those restrictions.
So what you're saying is you want private enterprise to lead the day, but when it comes to national security, the government will be a shareholder.
And again, a lot of this isn't private. We have seen what happens when the free markets get kind of perverted, because what happens with critical minerals, that several companies have tried to stand up critical minerals facilities in the US, and the Chinese come, lower price, undercut them, and then they're bankrupt. So we are going to put in a system, price floor, price ceilings. And when you talk about multilateralism and the US leading, I just hosted at Treasury last Monday the G7 plus plus, so G7 plus Australia plus India plus Mexico plus South Korea, and we are working at warp speed to create a critical minerals block where we can mine, process, and refine critical minerals, and China won't have this sword over our heads.
So how long do you?
Which kind of explains Venezuela and Ukraine. Now, Ukraine kind of being a hub for corruption, money laundering, bioweapons labs, and all the rest of the corruption that happens in Ukraine doesn't, is not as important to U.S. national interest as the rare earth minerals that are in those contentious regions, the Donbass region, Donetsk, Luhansk. Those areas are very rich in rare earth minerals. I think that's been the real play there, is control. Same with some rare earth minerals and oil that was found in the Mediterranean off the coast of Israel, Palestine, etc. And then now Venezuela. Not only are they the largest deposit of oil in the world, but also rare earth minerals and natural gas. Last but not least, guess what else is really, really high in natural gas and rare earth minerals? Greenland. Are you guys catching the drift here? These areas, wherever there is natural gas or rare earth minerals, is becoming the new oil for America. It's the new Middle East. Cobalt and lithium is the new oil. Wow, that's the new paradigm, people. Hopefully we don't enter another 20 years of needless wars just to go acquire this resource. Hopefully we can do this in a smart way. But everything that they're doing, all the wars they're starting, it kind of is all pointing in one direction, which is whoever has the most batteries is going to win this AI revolution. And I think that America is going to do it by any means necessary, so that we don't get outcompeted by China. Crazy, crazy times.
You think it will be until the United States is in fact independent in terms of the refinement of these minerals, independent in terms of oil, et cetera? I mean, I know that the U.S. could be the largest producer anyway.
Almost there. Don't spaz out now. We can do it.
But do you expect this year, next year, what's your timetable in terms of the U.S. not relying on China for these things?
Well, obviously for energy, we are independent. We're an energy superpower. And I would say 18 to 24 months. I went down about 2 months ago to my home state of South Carolina. And in South Carolina, for the first time in 25 years, there's a producer there who made rare earth magnets. So they are starting to come off. The supply chain, they believe that within 2 years, they can fulfill most of the rare earth magnet needs for the US. And then we also want to help our allies because the supply chain is important.
Mm-hmm. What do you want to say about sanctions, something else you've been working on, of course? What are you planning there in terms of Iran and the impact there? Do sanctions actually work? And the same question with regard to 500% secondary sanctions or tariffs on countries who purchase energy products from Russia.
Okay, so two things there. There are Treasury sanctions. And if you look at a speech that I gave at the Economic Club of New York last March, I said that I believe the Iranian currency was on the verge of collapse, that if I were an Iranian citizen, I would take my money out. President Trump ordered Treasury and our OFAC division, Office of Foreign Asset Control, to put maximum pressure on Iran, and it's worked. Because in December, their economy collapsed. We saw a major bank go under. The central bank has started to print money. There is a dollar shortage. They are not able to get imports. And this is why the people took to the street. So this is economic statecraft.
Well, this is the dumbest shit I've ever heard in my life. Okay, so he's making it seem like there was a pretext, like they were proactively warning people about the collapse of the Iranian currency and making it seem like they had the foresight to know that the currency was going to collapse. And then they collapsed the currency. It's like going out being like, oh, the sky is falling, the sky is falling, because you're about to go shoot this ray gun at the sky and actually make it fall. You're going around, oh, the banks are going to fail, the banks are going to fail. And then you go and short all the banks and literally deliberately make them all fail. And then like keep pressing the issue until they fail. If America had not intervened and did not just the what's it called, the trade sanctions, but also these treasury sanctions to kind of bar them from international trade, from international the international money markets, the capital markets, the SWIFT banking system. And kicking them off that led to a lot of the economic turmoil that's in the country, which is leading to the revolutions. So this guy's claiming that he saw it in advance, when in reality, they caused it. The United States government, specifically the Treasury and Trump, caused that crisis to happen. Self-fulfilling prophecy.
No shots fired, and things are moving in a very positive way here. On the 500% tariffs on the buyers of Russian oil, that is a proposal that Senator Graham has in front of the Senate, and we will see whether that passes. We don't believe that President Trump needs that authority, that he can do it under IEEPA, but the Senate wants to give him that authority. And just to be clear, that we have Europe buying Russian oil still 4 years later, they are financing the war against themselves. India started buying Russian oil after the conflict began, but President Trump put a 25% tariff on them.
I hope you guys heard that. 4 years later, the number one source of oil for Europe is Russia. Once the war broke out, the price of gas went up because it was harder to sort of transact in between those oil producing countries. There was a lot of sanctions going around. So all of a sudden, Europe is paying Russia way more money for oil, oil being the largest component of Russian GDP. So we made Russia rich and financed the war. Europe was actively paying Russia and financing the war against themselves. How fucking stupid can they be? This is why Trump was roasting them the whole time, saying you guys are literally funding your enemy. And that's why he made them all put up more money into NATO. He's like, if you guys are going to be this dumb and you guys are going to be this irresponsible, then you have to pay up your fair share. We're not going to sit there and babysit you. I think it was one of the best things that Trump actually did, is having NATO pay up their fair share.
And India has geared down and has stopped buying Russian oil. And then 3, China is a very large buyer of Russian oil, as they are of Iranian oil, as they were of Venezuelan oil. But guess what, Maria? No more Venezuelan oil for them.
So would you,
Look at that smug smile. Hey, look how proud of himself he is, saying that we're blocking China from getting Venezuelan oil. This whole thing has been about blocking China and signaling Western dominance. I think when Trump joked about the Monroe Doctrine, calling it the Don Roe Doctrine, kind of gave us another hint. Besides rare earth minerals, this is all about strategic security, because I think Trump sees the threat from Russia and China as being very real. And so you can see the way that we're locking down. We're trying to take over Greenland in order to protect our sovereign territory from missile attacks. We're trying to go around and buy up or invade high mineral rich and high resource rich countries so that America can have more strategic or more resource security. I don't know what they know, but it seems like they're gearing up for some kind of war. Now, Scott Bessent seems very happy about doing the chess move where he was able to do a defensive move and block China from taking the oil here in our Western Hemisphere. Because if Russia is sanctioned and people can't get oil from Russia, Saudi Arabia and Venezuela are 2 other options. There's obviously tons of oil producing nations, but Saudi Arabia, Russia, United States, Canada, and Venezuela being the 4 sort of, or 5 largest. producers. Okay. Very concerning that he's this happy about basically walking us into global conflict.
Treat China the same as the others in terms of buying Russian oil
Uh,
with regard to tariffs and sanctions?
Well, we'll see what happens with this Senate bill and with the Iranian oil. That'll be up to President Trump.
Secretary, what do you want to say about artificial intelligence and the idea that AI efficiencies will likely kill jobs? A lot of people are worried about jobs. Do we have a plan in the U.S. government right now in terms of job creation in the face of AI efficiency killing jobs?
Well, Maria, we are seeing the record factory groundbreakings. That's why President Trump wants to bring back these precision jobs to the U.S. And historically, every productivity boom has led to job growth. Now, can there be some toing and froing in terms of people changing professions? I can't remember what the number is. Maybe you know it. 50–60% of the professions today didn't exist 30 years ago.
Well, big number. Technology.
It's a big number, but it's something we're very cognizant of. We haven't seen it in the numbers yet. I think that it could be very different than what we saw with the China shock. The China shock was a blue collar phenomenon. My guess is the AI shock might be a white collar phenomenon. We'll see.
Secretary, as we wrap up here, a moment ago, you said, look, you've been dealing with markets for a long time, your entire career. What do you think of markets today? I mean, the market has been rallying on the president's policy. Today, of course, we're seeing a sell-off, but do you think the markets are getting it right in terms of rallying on the president's policies going into this Davos meeting?
I try not to the extent I had success in the markets, it was not making short-term predictions, but I can tell you what has been very hard.
And just for reference, Scott Bessent is one of the top 3 or 4 financial traders to have ever lived. He was the right-hand man of George Soros at the Soros Fund. It was him and Stanley Druckenmiller that were responsible for like the really big trades that Soros had put on. George Soros had crashed the Bank of Thailand by shorting the Thai baht. He also was responsible for Black Wednesday, shorting the British pound and crashing the Bank of England. Scott Bessent was the guy at the desk, the trader at the desk, actually managing the orders to crash the Bank of England and cause the biggest currency, like the biggest currency event in history. And so he knows a thing or two about speculating in foreign markets. This guy's a very capable person. So I'll take his word on this piece at least.
What do you think of markets today? I mean, the market has been rallying on the president's policy. Today, of course, we're seeing a sell-off, but do you think the markets are getting it right in terms of rallying on the president's policies going into this Davos meeting?
I try not to the extent I had success.
One last thing, and they're all inside trading. And so there's another reason why he doesn't want to speculate too much, because then he's going to mess up the trade. When they get out there and they present some bad news, or they present the rumors of bad news, they'll leak it to the press. Markets will panic and start to sell off, and then the Fed or the Treasury will go in there and then buy assets in the open market, or there'll be some large-scale institutions that buy assets in the open market and then boost the stock market back up. So it's the rumor. So it's sell the rumor, buy the news. It's the exact opposite. It's usually like buy the rumor, sell the news. This is, actually, well, this is the same thing. Yeah, sell the rumor, buy the news. They want you to get scared out of your positions or into a bearish mindset, and then the market starts to panic. Hedge funds become short sellers. Net selling pressure kind of builds up, and then large-scale institutional buyers buy it up at a discount. And this has kind of been their play the whole time. Set expectations dirt low, over exceed them. That way there's like market optimism. Same thing that all companies do around earnings season. Just say like, oh, I don't think we did that good this quarter. And then your results come out kind of halfway decent, and everyone's like, oh, I thought you guys fucking tanked. They're like, no, we know we did decent. And so the expectations were so low that the real result kind of seems like a giant relief. And the markets always rally. So set dirt expectations and then crush them. It's kind of been
In the
their policy.
markets, it was not making short-term predictions, but I can tell you what has been very heartening for me. I don't have time to follow the markets as closely, But to the extent last year before, everyone said,
As the Treasury Secretary, now you're like, all of a sudden, now you don't have time to watch market. What are you doing all day?
oh, this is just Mag 7 stocks. It's not healthy. We've seen a big broadening out in the market. The Russell index, the smaller cap stocks, has outperformed. The S&P equal weight has outperformed. And I actually think that speaks to the economic recovery. We're seeing it across all sectors. Our friend Ed Hyman at ISI does these corporate surveys. Corporate surveys are the highest that they've been since June 22. And I think you're starting to see it in all sectors of the market. And the market follows the economy. And again, I just think that we have the best.
I can't help but cut him off. Okay. The largest growing sector of the economy last year was sports betting. So if there's so much productivity growth, if we're bringing labor jobs back to the US because of these tariffs, it's more attractive to build in the US. So jobs are supposed to come back here. Trump is supposed to be creating all these jobs. We're supposed to be compensating for the lack of, kind of immigration by creating more domestic jobs. But the largest growing sector of the economy is sports betting. It's gambling. It's absolute degeneracy. The loss of most people's hard-earned income and all the money kind of siphoning off into a few hands. So it doesn't really seem like there's been an improvement. Using the Russell index as an argument that the biggest argument for people who argue against using the stock market as a metric for economic health is that there's only about 7 or 8 stocks that really run the show when it comes to NASDAQ or the S&P. And the rest of them are sort of zombie companies trailing along. Those Mag 7, or they used to call them, you would have the FANG stocks back in the day, Facebook, Amazon, Google, Tesla. Now, those sort of like the top 7 names. Now NVIDIA is on that list. Their performance determines the direction of the stock market. All the other companies are just dragging along, which is still true to this day. And he's saying that that's no longer true. It's like Trump would not have had to tell the contractors to stop buying back so much stock and actually build stuff if all these companies weren't just running on zombie debt. Most companies just literally make just enough money to get the next round of debt, go to the public markets and raise some money, and then make just enough money to break even on their interest payments on this debt. General Electric is in that boat. Thomas Edison's company started back in the 1800s. So the majority of the companies in the index are completely zombie. I don't know what the fuck he's talking about.
Place in the world, come build your factory. You have tax certainty, you have regulatory certainty, and you have energy certainty.
And of course, deregulation. And that was one point that I wanted to make before we wrap up here, that Mario Draghi wrote a report 2 years ago about regulation in Europe. And the fact that the largest market cap company in Europe is Novo Nordisk because of Ozempic, about $400 billion or so. And we just saw it.
To answer your question on YouTube, they might do the initial sell-off, and it doesn't need to be that much, just a big enough move to create a spike in the markets, and then all of the hedge funds do the rest of the work for them. The retail market will do it. The hedge funds will essentially just, especially all the high beta and sort of like the algo funds, they all become net sellers after a certain standard deviation move, up or down. So if the market goes up 1% within like a 5-minute span, then all the algos become net buyers or net sellers. They enter a bunch of like buy stops. And so that's basically what they do, is they try to trigger a sell-off, let the market basically do the work for them to drive price down. And then they can basically they have enough people on the other side of their trade to now be able to put in a big buy. If you want to put in a $10 billion buy position, you better have $10 billion of sellers on the other side. Otherwise, your trades won't get liquidated. And so what you need to do is kind of drive some selling pressure, sometimes artificially. So you might sell off a couple candles and then let the market do the rest of the work for you to drag price down lower and lower. And then once it hits an institutional buying level of interest where most sort of institutional players agree that that is a discounted price, then you start to see large scale institutional buying pressure because there's a bunch of people selling as it drops. And so I say don't chase, because you'll end up just being exit liquidity.
NVIDIA in the United States hit $5 trillion.
Well, clearly, Maria, the innovation, the change, and the ability to adapt is in the U.S. The U.S. is the innovation capital of the world. I don't think anything's going to change that. I was just asked in another meeting by some business leaders, what advice would you give to Europe? And I said, I would operationalize the Draghi report, because the EU was supposed to cut down on red tape, but it is logarithmically increased it. When I talk to tech executives, they will tell me it is easier doing business in China than the EU.
Wow.
That's not a great stat. I had a European businessman come to see me the other day. He said, Secretary Bessent, it took me 3 days to get an appointment with the White House and with you. It took me 90 days to get an appointment with Ursula von der Leyen, and we are one of the largest employers in Europe. So there's just a different mindset here. And I think the mindset has got to change. It's got to change to a growth mentality. And that's President Trump's invitation is we are growing, we're deregulating, and come and join us. The U.S. is going to host the G20 meeting next year. And on the finance track, we have identified the greatest financial risk as a lack of growth, because post-COVID, every government balance sheet has ballooned, and we have this gigantic government debt. There are two ways you can either cut your way out of it through austerity, no voter wants that, or you can grow your way out of it. So we are inviting the world, come grow with us, prosper with us, and we can all do it together.
Secretary, thank you very much.
Good.
U.S. Treasury Secretary Scott Bessent, thank you, sir.
Good.
If only Trump would just say that. We're all trying to grow our way out of this global debt. And the more productivity that we have through cooperation, the more productive the whole world will be, and we'll be able to grow ourselves out of this faster. It's a pretty good message. Instead of saying, okay, we want to take this, you want to take this, China's not playing fair, these guys are not playing fair. No one's playing fair. Everyone's looking out for their own national interest. But this this slogan that Bessent just put out about unity and about cooperation versus competition, I think is the stance that Trump should be taking. Because instead of, like, every country that we alienate, every time that we go and snatch a leader from a sovereign country and kidnap him to the United States under random charges of gun possession or some dumb shit, which, then it leads to the other countries in the world that are on the fence about whether they should continue to ally with the United States through fear of military retaliation, or if they should go and join a new alliance with China or with the BRICS countries. And so every time that we do something bad to a country, we're driving them further and further into the hands of China. That's what we did with Russia. We just drove them right into China's arms. That's what we're doing with India, with some of the tariffs that we have. That's what we're doing with Iran. That's what we're doing with a lot of the Latin American countries, because the whole purpose of the Venezuela kidnapping of Maduro is to show the rest of the Latin American countries, Venezuela specifically, El Salvador, I think they mentioned Mexico and Colombia, but mostly Colombia, because I think Mexico, we already have our puppet in there. Side note. So they're trying to show them, if you go to China, if you're trying to sell your natural resources to them and partner with them, as opposed to keeping your primary alliance with us in the United States, then there will be military retribution. So it's a giant scare tactic, as opposed to working through cooperation. We're driving everyone into the hands of our enemies. That's going to come back to bite us in the ass unless Trump is successful. I don't know. You guys let me know what you think. That's about it for me. I'm expecting price to actually break through these highs, but I will be taking a short right here at 25,425. So I'm going to be taking a scalp. Price will likely come back down halfway through the range, create some kind of support, and then continue to boom to the upside. So I'm going to be taking a short-term sell position here at 25,425. And then if the market creates this support later on, then I'll be taking that higher low support and taking the market higher. Okay? Anybody have questions, comments, concerns before we hop off? If you guys are watching this on YouTube, before you step out, just drop a like. If you guys haven't already subscribed, drop a subscribe. We have some very, very exciting things launching for you guys. Some very, very, very fun competition style things. So stay tuned for that. Can't wait to announce it. And of course, happy and safe trading, everybody. Take it easy. Peace. All right, members, if you guys have any questions, let me know. The scalp is probably going to be around this kind of double top